All right, welcome back into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for joining us here today. Thanks for keeping us on in the background somewhere where you're at. We love it when we're on in the background of the garage, the shop, the barn, the office, and now maybe even the tavern. It's that time, isn't it? It's that time of year, too. Things are quieting down. Let's take a look at our first board. That's corn. We were down about 2 to 3 cents across the board last time we visited, and we still are. Maybe a little bit more. Not really. March is off 2 3/4 cents to 4.42 1/4, a penny off the low. May, that's down 3 1/4 cents to 4.48 1/2, and that's about 3/4 cent off the low. While July is off 3 1/4 cents to 4.51 3/4, and again, that's 3/4 cent off the low there. That's corn. Beans, this is a little bit more of a loser. Jan's down 6 3/4 cents to 9.75 1/4, but we're well off the lows of the day. March is down 9 cents to 9.77, and that's 5 cents off the low there. We don't have a 10 handle on anything right now, by the way. 9.85 is last. 9.85 1/2 is last in May. 10 1/2 cents lower there, as well as July and August, both off 11 cents as well. So beans giving back a lot of ground today, or not a lot, but just in perspective, a lot. Wheat in Chicago, that's down 6 1/4 cents in March. 5.43 3/4 is last there, and that's a penny and a quarter off the low of the day. We've got a May board down 6 1/2 cents to 5.54 1/2. That's Chicago wheat. Let's go to the hard red wheat in Kansas City. That's down 7 1/4 cents in March to 5.52. May, that's off 6 1/4 cents to 5.60 1/2, and that too is about a penny and a quarter off the low of the day there. Spring wheat, Minneapolis, 4 3/4 cents lower, and that's March. 5.95 1/4 is last, a penny off the low. May is down 4 1/2 cents to 6.02 3/4, and cotton, that's been lower as well, 27 points lower, 68.79 is last in March. Cotton down 27 points. Let's bring in our guest analyst, it's Mr. Ted Seifried, Zaner MarketCast in Chicago. Ted, thanks for being on. All right, anything jump out at you there?
New contract lows pretty much across the board in soybeans. That's not a good story, Scott. The interesting thing about that, though, is look at what's happened with the Jan-March spread. It's almost to even money. I mean, it had been up to a negative 16 cent, or a 16 cent carry just a couple months ago, and it continues to close in. Is that going to go inverse? And if it does, I mean, this is just kind of a strange environment to do that in, right? I mean, usually when you have months going inverse like that, when you have a front month going up and over a back month, that's in a bull market. But as I just said a moment ago, we're making contract lows across the board today. So what's going on there? Is that spread hinting towards something to come in the future? Or is this just sort of a short-term, last-minute end users trying to pull out as much cash before really shutting it down for the rest of the year? And honestly, I'm not sure. It's kind of a weird thing, and it can happen in low volume, thin markets, which is what we have. But this has been a trend that's been going on for a month and a half. It just continues to narrow in what should be a pretty much full carry market, it seems, based on what the flat price has done. Sorry to get all technical on a Tuesday afternoon, but it is an oddity, and we are keeping an eye on it. Other than that, corn's given back most of the gains from yesterday. I don't know if corn has really anywhere to go after we saw the bullish report, but now we've got some thinly traded holiday season, so it could just be sideways. Strange things can happen in low volume, as we just said, though, so who knows? But I'll be around for the next 2 weeks watching it.
All right. There's a lot of things that don't make sense. I mean, look, we're going to cut rates tomorrow when it comes to the Federal Reserve, and we're at all-time record highs in the stock market. That doesn't make sense either. All right. Stay right there. Great points. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Mr. Ted Seifried, Zaner MarketCast. He's in Chicago. We're in Nashville. We'll be right back. All right, welcome back. Let's talk about some livestock, right? We'll finish things up on livestock note. We'll see what we've got going on in the live cattle. We'll bring up that board. I brought it up while we were away. Not a lot going on here, folks. Got a little something. Well, we're down 27 cents in Feb. 189.70 last there. That's 20. What is that going to be? That's 27 cents off the low of the day. April's down 17 cents to 191.57. You go all the way out to August. We're up in nickel, so there's a green arrow there. 184.95 in August. Not a lot happening there. Now, feeders were higher the last time we met, and they still are, and they've added onto them a little bit. Jan's up $1.92 to 257.47. And that's about 7 cents off the high of the day there. March is up $1.85 to 258.22. Go out the deferred's way out there. August is up $2.02 to 264.15. And ding, ding, ding. If I had a bell, I'd ring it. That's a new high of the day. There you go. We'll take it, right? Moving over to the lean hogs, and we'll get back to our guest analyst. Lean hogs down about 50 cents up front. That's Feb. 83.05 is last. That's 30 cents off the low of the day. April's down 25 cents to 88 even. All right, let's bring him back in. Ted Seifried, Zaner Ag Hedge. All right, anything there that tickles your fancy, as they say?
Yeah, I mean, we're really going to be pulling at straws here, Scott, because it is fairly low volume. And you know, fat cattle have $1.20 wide range. Not much. But look at the feeders, you know, up $2. Why can't the together and follow? That's a little bit of a disappointment today. We started stronger, but like you said, we're only 27 cents off of the low at this point. So, you know, live cattle aren't feeling the mojo happening over in the feeder cattle. And that's, I don't know, maybe not a great sign when we have that saying, right? Feeders are the leaders. Well, when feeders are up pretty significantly, we'd like to see the cattle following along. And when they don't, a little bit of a pause and makes us kind of wonder a little bit why. And it's a bit of a red flag. So there is that. Hogs, kind of a similar story. I mean, started with strength, couldn't hold it. Yes, we bounced off the low marginally, but man, just price action in the hogs just keep acting overall not good in my book. I mean, anytime we have good days, they're not followed through on. We continue to kind of struggle here. It just feels like hogs want to have a bit of a deeper correction. So I think that, you know, from a producer standpoint, you need to be looking at downside protection there.
All right. Always great to talk to you. Thank you very much. See you again next week. That's Ted Seifried. Zaner Ag Hedge coming to us from Chicago. Bring it back here to Nashville just one more time and hand it back over to Suzanne.
One last time. Cal Guy Close, of course, coming up at the top of the hour. Thank you, Scott.